So we have this midnight, Wednesday, okay? And we cross over to Thursday. Prices trading where? What is it doing here? What is that? Relative equal lows. Okay, wonderful, wonderful. But why is it doing it there? Well, what does it say over here? Daily sell side imbalance, buy side inefficiency, high. So when price is above it, okay, when it's above it, how is it going to treat that level? As a discount level. Sweep. What's the body's telling you? It ain't even touching it. What's the body's telling you? It ain't even touching it, but it's a higher low. The market rallies back up. What is it doing in this area? Where is it at? It's inside that old daily volume imbalance. It's allowing, the algorithm is sweeping into these levels, crossing over levels, coming back down. And then once you know what the narrative is, where the price can go. Well, what is that? Over here, what is this? Relative equal highs. What's resting above those relative equal highs? Buy side or buy stops. It's traded down to a discount level or PD array in the form of the daily sell side imbalance, buy side efficiency high. Okay, that is a PD array. That's one of the 81 that I have. Each one of those have a characteristic that can be inverted. So when you are expecting higher prices, which we've been calling, we have not been trying to pick the top. The market trades down outside of the volume imbalance. So where could it trade to? The next PD array on the daily chart was that high, that SIBI. It trades to it here, then moves back inside of the volume imbalance. Inefficiency on the upside after poking its toe outside of the yellow area, which is the volume imbalance. This fair value gap forming when? Look at the time. What time is that? Right there. What time is that? It's 1 minute past the opening range at midnight. Oh, you did talk about that, ICT. You did. You did say if I want to trade in London, you want to trade London, Killzone? You want to trade Asia's close? That reference point there from midnight Eastern time to 12:30. That's your opening range. First presentation. What is that? First presentation is when you have time of day, because everything starts from time algorithmically. And first presentation, that means the first inefficiency. You want to take that and carry it through, cast it forward throughout the entirety of the day. Okay. It uses it here and touches it right there. It drops right into that. Okay. Here we have 1:50 a.m. all the way over to 2:10 a.m. Everything I'm showing you is the same thing in forex. Okay, but this is a macro. It's the first one you're going to get to as you enter into London Open Killzone, 2 o'clock to 4 o'clock. That's your sweet spot. Okay, then we see it touch that fair value gap, which is first presentation right there inside of the range of the first 30 minutes, 12 o'clock to 12:30 a.m. Eastern time. Does it react off of it? Yep. Creates another fair value gap, which is also part of what? What do you see here? Here, here, here. Bullish breaker. So even if you don't see this fair value gap, it's fine because you'll get the breaker there. Drops once more. What is this little indicator telling me right here? 350 to 410. Does the market respect that fair value gap here? And does it respect it here? Does it send price higher? Yep. What time are these setups forming? The macro times that I said.